Hey guys, Don Durrett, Gold Stock Data. Um, Yesterday I did a video on the majors, and this is my search screen. This is my premium. These are all my list that you get if you're a premium subscriber. So here was the 10 majors that I did yesterday. And I realized because people were telling me, well, this stock deserves to be there. So I created an emerging major, so we're going to do that one. And so I want to show you the majors real quick before we go over the 10 emerging majors. We can look at the market cap. So the smallest one is 5 billion. So these are kind of the true majors, 5 billion or bigger. And I added Alamos back because I took it off and had Equinox on here. So these go up to 5. And then the emerging majors, well, these 10. And we have market caps of, let me sort it. I think it was sorted. Let's go sorting. 3.6 to 2.3. And these ones that are 2.3, I mean, they could easily get to 3 billion fairly quickly if gold prices go higher. Um, so maybe I'll just leave them sorted by market cap so you can know biggest to the smallest. And a lot of these stocks where people named these. These are all gold, by the way. So if we look at their ratings, um, the blue's top pick, green is top 25. The way that I do this is a top pick or a top 25 has to have at least a five bagger upside. And if it's blue, that means it's not good enough to be on the top 25 list. So we have Equinox and Genesis. Genesis is green and black because it's not a five bagger. But sometimes these 2.5s can be almost five baggers and they can be really high quality companies. Equinox has high cost and balance sheet issues, so they're black, but it's four. But as you can see, most of these, it's about all of them they're all five baggers except Genesis. So it's some serious leverage here. I mean, that's the reason why I'm sharing you these lists because once we break out, I mean, these stocks are all going to double. And once they double, you're probably not going to want to buy them. So it's kind of a buy now or you're never going to own them kind of thing. So if we look at their balance sheets, if we look at IM Gold, a lot of cash, 500 million in cash, and also a lot of debt, but a fairly decent balance sheet. And we have their multiple here, so it's trading at a 5 multiple, which is really cheap. So IM Gold, they had some problems. I mean, they almost went bankrupt, and now they've kind of righted the ship here, and investors haven't jumped back in them. B2 Gold, it's kind of amazing. You have a $3 billion market cap, and it has a multiple of 3. And this is their free cash flow current. So we have IM Gold at 700 million. We have B2 Gold at a billion, which is kind of a mind blower, right? Trading at a 3 multiple with that much free cash flow. There's no way that B2 Gold can stay. I mean, this stock could double in a heartbeat. Nobody wants to own it because of it has two issues. One is Mali. Their largest mine is in Mali, and people are nervous about that. And then they're building Goose, and people think, they're going to have cost overruns or they're going to have ramp up issues. But nobody wants to touch this stock. And it has a good balance sheet. 300 million in cash, no debt. It makes 0 sense. El Dorado is another one that's super cheap. Its balance sheet is decent. 650 cash, 750 debt, trading at a 4 multiple, generating 700 million in cash. It's kind of crazy. Then we have Equinox. I'm going to show you Equinox's cost. Um, we will get there. We'll go to cost, and their costs are a little high, but they're trading at a 5 multiple, 4.7, generating 600 million. And here we have, their debt $1 billion, and people are a little nervous about that. But once they clean up their balance sheet. Artemis trading at a 4. I like this. Their Blackwater project, they're ramping up now. Their balance sheet isn't that bad. 100 million cash, 350 debt. It's not a problem. Orla Mining, I'm a big fan of this stock. I think they're a shark. I think they want to grow the company. I Am Gold used to be a shark. I think B2 is a shark. They're an up and coming shark once they get Goose built. But I think I Am Gold will return to that. I think I Am Gold wants to grow. B2 wants to grow. Eldorado and Equinox also have shown that they love to do acquisitions. And so these are sharks. All these companies are sharks. These are the companies. It's hard to be a shark if you're a major. So these companies are still sharks, but they're 3 billion. It's like once you get to like 5 billion, you have to be very careful on your acquisitions. You kind of want to acquire tier one projects. So tier one is 5 million ounce gold projects. You don't really want to do a 2 million ounce deal. So the companies that are bigger than these guys, they want to buy these. That's who they want to buy these emerging majors. They don't want to buy the 2 million ounce. So the 2 million ounce, 3 million ounce projects, that's who these guys get to swallow up. So these are the kind of the true sharks. Whereas the big majors, they got to be more strategic, if you will, on who they acquire. And so they'll probably go after these guys. Artemis, we are just talking about this, the Blackwater project, trading at a 3.6, 700 million in free cash flow. It's, oh, I was talking about Orla. Orla has a lot of debt, 671, 80. They just put on all that debt because they did an acquisition to change the whole dynamic of the company. They were a 100,000 ounce producer, and now they've jumped significantly. I get so let's go take a look at Orla. Um, so they have 15 million ounces of gold. So they have a lot of gold. 15, and they're going to be producing. They jumped from 100 million, 100,000 ounces to 300,000 ounces. But to jump to 300,000 ounces and to basically become a big player, they had to take on that debt. They didn't have to, but they could have done a lot more dilution, but they decided to do that deal. And I'm looking. This is the project that they acquired, Musselwhite in Canada. So yeah, they had in order to get this Musselwhite project, they had to do that. This is a company, Orla, that has a really good strategic shareholders. They got Newmont, Pierre Lassonde, Agnico Eagle, and in Fairfax, this guy's a billionaire. They have really strong. You usually don't see companies of this size with this kind of strategic insiders. So nobody can acquire Orla. Orla is the kind of the ultimate shark. No one's going to buy them. They're going to go buy they're going to buy everybody else. If we look at insiders, I just squalled some pepper. 1 second, guys. I lost my voice. I swallowed some pepper. Just had dinner. If we look at 1 second, it'll come back. I got pepper in my throat. Okay, if we look at the insiders, you really only have these are really the four sharks: Equinox, Artemis, Orla, and G Mining. These are the companies nobody can touch. They control their own destiny, and they're gonna swallow up a lot of these other companies that don't have. If I say NA, that means it's less than 20. So these other companies, they kind of are at the mercy. These companies want to go after them. Okay, so let me see where we were at. We're on G Mining. Okay, we're going to go for the debt here. So G Mining, 109 million in debt, 80. They just did an acquisition and they're going to be adding debt. It's a big, the project that they're building is it's pretty big, and they're gonna have to acquire some debt to build it. Um, I like G Mining a lot because, like I said, it's a shark, and they're gonna grow. This is a company that they've done two acquisitions. They're not done. They're gonna be doing more. They're trading at an 8 multiple, so they're not super cheap. But I like it. Perseus, I like all of these stocks. I've owned Perseus. I think Perseus is a 10 bagger for me. I've owned Perseus for 10 years. It's a 10 bagger for me and is trading at a 3 multiple. Decent, really good balance sheet. 700 million in cash, no debt. Perseus has been a shark. They've done a lot of acquisitions, at least three significant acquisitions, and they're not done. They just did an acquisition last year, so they just keep growing through growth. The reason they're trading at a 3 is because they're in West Africa, and they're kind of expanding out throughout Africa. But right now, I think they did one other project in East Africa, the Orca, the Orca project. But they're focused in Africa. Genesis is in Western Australia. They have 18 million ounces of gold, trading at 11. The reason why they're trading at 11 is because they're growing production. This is what you're going to see in the Aussie stocks. You're going to see them all in double digits pretty soon. And right now you have Capricorn and I think Gold Road and Genesis at double digits. You're going to see all the Aussies there. They're all going to get a premium for their location. But Genesis has 18 million ounces of gold. It's a nice growth story. And we have New Gold. New Gold, it's unbelievable how they've lowered their costs. They just came out, I think their earnings were out this week, um, maybe last week, and their ASIC is like 1100, 1150. It was at 1800. That's how much they've dropped their ASIC, and their ASIC has fallen significantly, and their ASIC is going to keep going lower the next 2 years. It's pretty amazing. I I'm really glad I got back into New Gold. I got out of it because their cost exploded and they were having trouble, and then they started fixing their costs, and I got to get back into that. So I got back in. So let's see if I don't own any of these. I think I own them all. Yeah, I own all of these, and anything as a quality five bagger, I'm pretty much going to own. Um, so you can see that multiples. Okay, we're going to scroll. We're going to look at their cost. So we got IM Gold at 2,000. This is the break-even cost. So they have a high cost, but I think IM Gold's costs are going to go down. Here's our margins, $800 margins. We got B2 Gold, a little high cost, 1850, but still they still have $1,000 margin. Now El Dorado, their costs are pretty good at 1,600. I mean, really good margins. And here we have the percentage margins. This is a really important number. I want to see the margins at least 30%, and every single one of these has 30% margins. Once you get to 35%, Equinox is at 31, but once you get to 35, to me, that's really good. Anything above 35 is excellent. So 25 is like marginal. I want to be at least at 25. 30 is good. 35 is excellent. Above 35 is outstanding. So we can look, these companies are all generating. So we got Eldorado at 16, Equinox high cost at 2,000. But I think the project in Canada um, is going to lower their cost at least $100, and I'm hoping 150. So that basically go to about 1850 is my expectations, because they have like 5 mines, and that one mine in Canada is not going to get their cost down to 1800, but maybe 1850, 1900. Um, and so we'll see how much it lowers their cost. They should be reporting like next quarter. We should get an idea. Artemis 1450, outstanding ASIC. We got an ASIC there of $1,000. Orla, even even better. Orla is like 950, $1,000 ASIC. But look at Orla. Look at their margin, $1,500. The G Mining, outstanding, 1,400. Anything 1,500 or lower is really good right now. Perseus 1,550, West Africa, and then Genesis is high at 1,850. We'll we'll see if they can keep their costs there, get them down. I think they'll get them down. And the new gold at 1,500, and potentially going lower. So just really outstanding performance by these companies. And like I said, I'm showing you these because I feel that once we break out, once that HUI breaks out here, I want to show you a chart. This is the HUI, and the HUI is a gold miner index. This is what I've been following since I started doing this started buying juniors right around here, 2004, right at the beginning. Wish I would have got in 2001. But since 2003, I mean, 11 years, we've been in this channel. And the reason why is because from right here, 2001, all the way up to here, gold was outperforming the stock market. And this last year, gold basically performed about as well as I think we had like 27% up gold, which was not as good as the NASDAQ, but better than the S&P. Not much. It basically traded kind of flat with similar with the stock market. It didn't outperform. But right now, gold is outperforming the stock market. Gold's up 20% for the year, I believe. Um, and and maybe it's the HUI that's up. I'm sorry, it's not gold up 20% for the year. The HUI is up 20% for the year. So the HUI, the miners are outperforming the S&P, but gold isn't necessarily. Gold and the S&P have been trading together. But my point of showing you this chart is that we're still in this channel. We we went down into this channel in 2013. Right here, we went into the channel and we haven't gotten out. We tried to get out in 2020. We couldn't. And then we tried to get out again. We couldn't, and now we're trying to get out one more time. So once we get up here, 375, this is when the bull market begins. So we have this opportunity to buy these producers before the breakout. That's why they're so cheap right now. Okay, so I was going to show you reserves. So reserves and resources, this is their total resources. So we got IAMGOLD at 29 million. B2 at 20, El Dorado at 29, Equinox at 43, Artemis 13, Orla 15, G Mining 10, Perseus 12, Genesis 15. I thought they had 18, and New Gold 5. So all of these have 10 million ounces or more. It's a lot of gold. So I don't think we're showing, so it doesn't look like, we're not showing silver. I'm just showing these as gold miners. And then these are the reserves. And we're looking at reserves. We got everybody above 10 except for New Gold at 5. So they have solid reserves. Now we're going to look at upside. So free cash flow. And I'm going to go ahead and sort these. So the worst is Genesis is a 4-bagger, and then everything else is 5-baggers. This is the upside, estimated upside at $4,000 gold. It might cost what the cost that I've estimated. Now, I could be wrong. These are my estimates. The cost could be higher than my anticipation. And this is all at $4,000 gold. And maybe they don't hit the production targets. And some of these companies need to grow. And I'm going to show you, we're going to do an example here. Some of these companies need to grow to hit these numbers. I think B2 Gold is an example of that. But some of them, they don't have to grow very much at all. So I think we're going to take a look at B2s. We have them as a 10-bagger here. So we're going to go and take a look at B2. So here's my rating. I got 4 as a possible 10-bagger, 3. So I don't have them as a 3-5 because they have Molly issues and they have the ramp-up issues. So 3-5 is like the better. This is your downside. This is also your risk reward. Upside is your 10-bagger, 3-bagger. And then quality, I basically put a second value on the downside on the risk reward. So this is the quality of the downside, if you will. Um, so, and these each have explanations if you click on help. Okay, so this guy is showing as a 10 bagger. Um, so they're supposed to add 100,000 ounces in Mali this year, and then 250,000 at Goose in this year. So they're supposed to add 350,000 ounces this year, and the ASIC should drop once Goose is built. So Q3 results was at 180. 180 plus 350 is 430. So they're supposed to look at they have 400 million in cash, and Goose is scheduled for Q2. The Q2 starts in April. So they have a really good balance sheet. So currently they're producing 1 million ounces, which is kind of crazy. I think I might be building. We're gonna have to go to their website, but this is their high cost. I only have them growing 200,000 ounces. So we go down here, we look at they're trading at 3. So this is their free cash flow, 1 billion, and then I have them 1 million ounces this year, and then 1.2 growing. So they're in order to get to 977, they have to add 200,000 ounces. And so a lot of these are built. These upsides are based on 3 to 5 years. So, okay, so they only had quarters, so this would be about 800,000. So they're currently, this is a quarter result, 360. So they're currently at 720. This was a Q3, but they're going to add 250 at Goose, takes them to 9, and then we have Fekola. So basically 720 plus 350. That's why I have them at 1 million. Um, One last thing we'll do is we'll go to their website and we'll look at their presentation and see. I think it said okay, corporate presentation view. See if we can get some guidance for the year because I put it at 1 million ounces, right? Okay, so here's the production profile for 25. Okay, so here we go. This is this year. They're showing 1 million right there. So I'm not blowing smoke, right? They're showing 970 to 1075 is their expectation for this year. So we got Goose going into production, but I have Goose. Oh, this is production for this year. So next year in 26, Goose will be higher. So we're actually going to have increased production next year. So I have Goose at 250. So that looks like 75,000 ounces for next year. So we could go 1-1 next year. Depending, I don't see any mines going down next year. So interesting, right? Okay, guys. Um, that's your emerging majors. Till next time.